We are here on this amazing day. Everyone, this is Cam Jones, FX Daily Analysis. Disclaimer, I am not a professional. Please watch these videos at your own risk. These videos are for entertainment purposes only. Thank you. Friends and family on Discord and Telegram. Families and friends who will prosper. Let's get back down to business. The time now is 5:01 a.m. The date is January 11th, 2021. The pair we will be looking at is EUR GBP. So guys, let's take a look at EUR GBP. Let's see what we see and what's going on in the market. Let's grab our blue pen, a blue paintbrush. So the market started off in this area here, and we can see that it created a W formation. The market pushed up, retested previous highs to shoot up further, and this is where the market back in November 1995 it created higher highs. So this is a major point right here for higher highs. Put that in a little rectangle. From there the market wasn't able to push up higher, so the market came down, big push to the bottom, and then from there it pushed down further, so it created an area of lower lows. In this area here, we're going to make a nice little rectangle. So we have where price started at, highest highs, lowest low. So we're looking for the market to probably go up. The market wasn't able to go up higher, but it did break through. So we had a trend line here. We can see that it was riding that trend line. It worked the trend line. It wasn't able to hold on the trend line to go up further, so it broke down. So once the market broke down, it created new levels of lower lows, as we can see here. So I'm going to put down a nice little rectangle for you guys. So this area here is the lowest lows of September 2000. And then the market, you can see that it was trying to do a W, came back down, retested previous areas, and kind of dipped into like a consolidation phase, broke out of new levels, as we can see here. Once it broke out, it came back down, retested previous levels, the break up higher so that's in July or June of 2003. It created new levels of higher highs from the low areas, and then the market bounced around in here like a big old consolidation. So we see a big old consolidation here, and then the market came down once, wasn't able to break through, came down again, wasn't able to break, came down a third time, wasn't able to break, and maybe like we got a fourth time right here. So the market tried to break this support 4 times, wasn't able to break through, so it came up, retested previous highs to come up further, got that nice breakthrough. And let me erase that because I think I see a W formation in this, so I'm going to draw it out for you guys. Let me back some of these lines up. So what I see is look like it's a W right here. So when we see a W, we'll find the area of a retest after the W is formed to break out further, and then the market goes up. So the W formation happened here before the market broke up, and then the market created new levels of high highs. This is the highest the market has ever been in. This is back in November 2008. There's a major high level here going all the way across the board, and we can see that the market reached high highs. We have one attendant to the top, so the market wasn't able to break our resistance, so it rallied back down, as we can see. So that's like a downtrend. So you can see our downtrend. If you had a line here, create that downtrend. So we feel like we would have felt that the market was going to go down, which it did, and then it created an area of lower lows in October of 2015. If I go back a little bit, I think I found another pattern. So let's take a look at this pattern that we found. And the pattern that we found on here is when the market rallied down, it it created a W, as we can see here. The market pushed up, retest previous areas of support to break up further. So you got that W. So when you see that W, we're looking for the market to go up, and which we did see, and it happened. And then from there, the market consolidated again in this area here. So it's a big area of consolidation on the monthly time frame. So it was trying to reach areas of higher highs. So once the market came here, it came back down to bounce up further. So it's retesting areas of resistance to bounce around in here, consolidate, to break down further of areas of support. So it's in that same box, as we can see. And then it came up again, hit that area of resistance in that same area. It wasn't able to break through, came back down, hit support again, wasn't able to break through, to come back up to resistance one more time. It wasn't a breakthrough. So we have about 1, 2, 3, 4, 5, 6, about 6, 7, 8 touches in here of the resistance, and about 1, 2, 3, about 4 touches, or maybe more if you go down the time frame a little lower. You'll probably find multiple touches on the support. But looking at EG in this area, it touched 4 times the support and about maybe 5 to 8 times on the resistance, and it's not breaking through. And this is what we have with the market currently, price actions here currently now. So we have to figure out what's going on in the market. So what we're going to do is we're going to clear the boards. Let's mark some things up. Let's go down to a lower time frame. Let's check out the weekly, see what we see. So we got to remember with the weekly or any time frame right now, currently we're working with the lowest areas of, I shouldn't say the lowest, but we're working with the price action area. So this area here we're working with. So we got to see what's going on in here. So we got to get a closer look. So like I said, this is a big area of some type of consolidation in this square. So we're looking for some type of breakout, and it's at the area, the price action is at the area of lower lows here. So we got 1, 2, 3, 4, 5. We got a breakthrough 6, another breakthrough 7. So about 7 touches that we have on that support. So the market touched 7 times, it still wasn't able to break through. So it's an area of strong support, which is the market is going to try to probably break up to the highest area of here, but we're not sure yet. So we're going to go down the time frame a little further to see if we see anything. Let's check out the daily. So the daily, we can see that big consolidation I was talking about. It's a lot tighter. We have about I see 2 attendants to the top here. So it's 2 attendants to the top. So the market pushed up twice, 2 attendants to the top. So something happened here where the market wasn't able to hold. So the market is not holding in this area here. We have this area here. So it's just bouncing around, up and down, up and down, up and down. So as it being at the lowest low, we're waiting for that breakout to happen to take it up to the next level. Let me go back. Let's erase our screen. Let's see if I could go down to a lower time frame so we can see what's going on or what the market's trying to do. Okay, so what we can see here in the 4-hour is, let's draw some stuff up real quick. We grab our trend line. We're looking for maybe an uptrend, maybe possible can happen. And within that uptrend, let's create a few support lines. Let's go with the, so we have about here. That was major support here. So this is the highest high we can see and say for the market. We're looking at market to break out of somewhere over this way. And we can see how price is actually respecting our line. The market came in, broke up, broke down. Now we see that W formation, broke up higher. It's trying to retest previous area of support, but it actually broke previous area of support here. So the market broke up, came up to higher highs, and then broke areas of support So you probably would think the market's going to go down, but once we look inside of the last 4 to 5 candles on the 4-hour, we can see that the market is still driving up and it looks bullish. So we grab our SR line, create some area resistance to say, okay, the market's probably going to reach here on a nice area of support somewhere here, and all we're looking for is that breakthrough and that retest, which we did. The market came up, came down, broke through the support, came back up through the support, retested the support to come back up to retest higher highs to shoot up. So once we get that pattern that we can see that we can take entry, we do so. So on a 4-hour or something like this, we'll probably look for an engulfing pattern. We'll probably want this green candle to overlap over this red one, and once it overlaps over this red one, we can take entry and we can ride it up for the buy all the way up to the top of this line here, and that will give us an estimate of, say, about, see how. So we found entry, let's say somewhere here. We'll take that up to the top for an estimate of 59 pips to the top. If we had to line up with our stop loss line, I'll extend that to about, play on the safe side, I'll go about 20 pips. You gotta remember too, sometimes the same way, you got to look at the market, and we see all these spike ups on the bodies of these wicks. These wicks is like, these are long wicks. So the same way you see long wicks going up, you see long wicks going, a few long wicks going down, is the same way a candle could form actually right here, and you could probably get that long wick that can drop down and knock you out your trade. If it does, don't get discouraged. All you gotta do is, look for re-entry of the market to engulf, or some type of doji to take entry and take it back up for the buy. But this is definitely a successful trade that we will be taking, and we will be waiting for is some type of engulfing pattern, some type of doji, and then we'll take the trade all the way up to the top. And like I said before, we'll take that for a maximum of 60 pips. We got to add a stop loss, 19 pips. It don't have to be 19 pips. You can even bring it up a little further. You want to keep it on this orange line here, keep it for 14. But just remember, if we have a wick and it knock you out your stop loss, don't get discouraged. Just get right back in your trade. That's all that is. So that was EUR GBP. We looking at that amazing trade for 60 pips as soon as we can. Look like it's happening today because we see the market rallying up. It's trying to come back to retest areas of this trend line to go up further. Alright guys, let's go over to our Forex pattern sheet, our Forex pattern cheat sheet, and let's see what's going on. So let's look at some neutral chart patterns on a cheat sheet. So the first one we're going to take a look at is the ascending triangle. So when you see ascending triangle, ascending going, meaning going up, and there's a triangle formation. So you can see that the market came in from somewhere, bounced up, reached areas of higher highs, came back down, reached the same level of high highs, came back down, reached the same level of higher highs, came back down, reached the same level of highs again, and before it decides if the market is going to break up or break down. Like I was saying before in previous videos, it doesn't really matter. I shouldn't say it doesn't really matter. The market doesn't always go in that same direction of that pattern. So just because you see ascending triangle don't mean it's always going to go up. Sometimes it goes down. We always look for the identification for the market to do what it do for us to take the trade, as in some type of pattern for us to take entry in that up direction or down direction. So as we see here, the resistance here is about 1, 2, 3, 4 touches. The market wasn't able to break, and then what creates that ascending triangle is the support areas is getting higher. So this area is higher than the previous area. The third area is probably higher than the second previous area. The fourth area is higher than the third one. And then the market either broke up and broke down, and that's a trade. So the blue lines is basically the trend lines in here. So if you did a this will be a horizontal trend line here, and if you did a if you just follow a trend line, ascending trend line here, you create that. You'll put your candles into a pattern of a wedge until ascending triangle, and then you take it, trade when you see it. And when it comes to this descending triangle, it's the opposite, which is very simple. The market is going down from somewhere, so we see the market came down from somewhere, it touched support, came up, touched support again, the same level of support, came up again, touched this level of same support again for the third time, came up once again, came up and touched support for the fourth time. So it was 1, 2, 3. We got 4 touches to the descending triangle, and it creates a whole strong area of stability for the support. So the market is not breaking through, but on the resistance side, we can see that we have higher lows. So this area is lower than this area is lower in this area is lower in this area. So the market is going down into a descending triangle, and then we'll wait for confirmation towards this area here for the market to see if it's going to break up and break down, and then we'll take that trade. Let's check out the symmetrical triangle and see what's going on here. So the symmetrical triangle is the ascending triangle and the descending triangle all in one. And I'll break that down to you. So the market is at the bottom somewhere, and it came up, and it came back down, came up, came back down, came up, came back down, came up, came back down. So, but the thing about it is, when it comes to the symmetrical triangle, there's no levels where the market is exactly touching the same level of support or resistance. So we have on the support side, which is the bottom, which would be like the floor, we have areas of lower highs, and on the resistance side, which will be like the roof here, we have higher lows. So the resistance is coming down and the support is going up. So that creates that triangle pattern to where we don't know what's going to go on. We don't know if the market's going to go up or down. But when we get to this area here, we just wait for the market to pop up or to break up or break down, and we'll find that through entry of the pattern. So once we see a pattern from the pattern sheets, it could be engulfing, it could be a doji, it could be a morning star, it could be a shooting star. So we see any one of them patterns, we'll take entry. Alright guys, that's EUR GBP. Okay everyone, thank you for watching. More videos are coming soon. Thank you for watching Cam Jones FX Daily Analysis.